What outlook for financial year 24 do we expect, which could be useful in the stock market? India's real GDP growth of 7.2% in financial 22-23 was amplified by strong capital formation, as we saw last year. Further, domestic economic activity has remained resilient in quarter one of financial year 24 as reflected by the buoyancy in various high frequency economic indicators, as we saw time to time. Purchasing Manager Indices, that is PMI, for manufacturing and services is also indicating sustained expansion. Disciplined fiscal stance by the central government and prudent monetary policy management by RBI has aided macroeconomic stability and has catapulted India into a league of fastest growing economies in the world. Right? Growth momentum is likely to continue on stable Rabi crop production. Expected normal monsoon. You already know very well that before monsoon, we were worried about monsoon due to El Nino. But you saw a good monsoon, continued buoyancy in services and stable inflation with a softening bias. Further, given the healthy balance sheets of banks, we already saw NPS are again at best point, right? So the healthy balance sheets of banks and corporates and declining uncertainty conditions are favorable for the capex cycle to sustain the momentum. Higher government capex, allocation in the green energy, green economy, including clean and renewable energy, higher government capex, allocation in the green economy, right? Green energy, including clean and renewable energy, will provide the necessary impetus to investments in energy transition and larger infra projects. You just saw the tie-up of Reliance with Brookfield, one of the largest tie-up. You just saw a very good infra projects receiving by Larsen and Toubro. So what is this? Boom in renewable energy. Both the current account and the fiscal deficit are likely to remain within manageable level. In financial 23-24, we saw how they were getting unfavorable during COVID. But post-COVID, yes, they are well manageable. On the global front, where you see major economies are turning around the corner, India is coming to the front line. Falling energy prices and headline inflation, easing supply bottlenecks, and the reopening of China's economy of the positive factors guiding the economy towards attaining the much needed growth for overall global economy. Major oil producing nations continue to invest on oil and gas industrialization and continue to invest on oil and gas industrialization and energy transition initiative that will augur well for the project business. Indian companies will continue its planned trajectory of profitable and return accretive growth. Indian large conglomerate companies focus will remain on cash generation and judicious capital allocation. Last year, inflation ruined your profits. This year, you will see better cash flow due to lowering of inflation. So Indian companies has a robust order prospectus pipeline in the medium term and are confident of sustaining their growth momentum by utilizing the emerging opportunities with an overarching aim of improving shareholders' value on a sustainable basis. So, friends, stay invested in fastest growing economy, my and powerful India. Thank you so much. All profit from it, family. Jai Hind.